Credit card users in Australia have cheered a court win that ruled late fees could amount to a penalty and be legally unenforceable. But a similar case won't be a prospect in New Zealand without a law change. For more on the situation on this side of the Tasman, with us now is Gareth Vaughan from interest.co.nz. Good morning to you, Gareth.
Good morning.
So why will it take a law change for something like this to be able to happen here?
Well, basically, New Zealand law doesn't allow for proper class actions as it stands at the moment. So basically what that means is if disgruntled investors or consumers have to opt in to what's known as a representative action, and if they don't know, they have to opt in with a litigant, and if they don't know that it's happening, or if there's a time deadline and they don't get in by that time, then they miss out. But there has been a class actions bill that's been knocking around for 2 years or so, and basically if this was to be passed, it would mean that the litigant just needs 7 names, then they go to the court, and the court then takes over the case, and then anyone who feels that they are a legitimate party to the claim can join in on the action.
So you said that bill's been knocking around for some time now. Where is it at exactly?
Well, it seems to be with the Minister of Justice or the Ministry of Justice. The Minister of Justice, of course, has been Simon Power. He's now left Parliament. We don't know who the new minister will be yet, but his office told me several months ago that this was a bill that the government was looking to pass, but it wasn't a high priority, and it would be passed when priorities allowed. Now, I mean, obviously Simon Power had a whirlwind term, passing all sorts of legislation during his 3 years as a cabinet minister, but this one was clearly not a big priority for him.
If it was passed, what would be the chances of a similar kind of success as we've seen in Australia? Do the same conditions exist here with credit cards?
Well, things are a little different here. The Commerce Commission oversees these type of fees. They're known as exception fees, which are avoidable penalty and late fees, such as when you're overdrawn on your bank account or your credit card. And the Commerce Commission has actually taken some action in New Zealand. Last year, they did a review of credit card fees, and they came out and said that there should be a $15 cap on late payment fees for credit cards. And back in 2007, they wound up a 3-year investigation into some poorly disclosed overseas fees, overseas transaction fees on credit cards, and they actually secured $24 million compensation for customers from 9 financial institutions, including the big banks. So, I mean, even if there was a class action suit in New Zealand, if enough people were disgruntled, it wouldn't necessarily be easy to prove there was anything wrong.
This class action bill, could it also have some implications for finance company investors who might want to take action to try and recoup some of their losses, though I guess it could be quite difficult given the state of some of the books of some of those companies? Yeah,
absolutely. Look, a select committee, the Commerce Select Committee, did a big report on the collapse of finance companies, and they actually only issued the report in October. It was chaired by Leanne Dalziel, of course, Power's predecessor as Commerce Minister, and they came out and actually recommended that the class actions bill be passed so it would give finance company investors an avenue to try and recoup some of the billions of dollars that they lost when the companies collapsed. But of course, finding that money wouldn't be easy necessarily, but potentially they could take action against company directors, trustees or auditors or other professional service providers who were supposed to look after their interests, but perhaps for whatever reason didn't.
Look, while we're talking about Australia and the banks, of course, we had the RBA cutting interest rates. Some indications the banks won't pass it on. Why not?
Well, basically, I think it's a question of putting their shareholders ahead of their customers. Basically, what they're saying is the European sovereign debt crisis has left their offshore funding very uncertain now. The big Aussie banks, like their subsidiaries in New Zealand, get about 1/3 of their funding from overseas. The costs are going up. It's a bit uncertain about what they can get. So that's their excuse. But they're very profitable banks. Their funding needs aren't huge at the moment because there's not a lot of lending growth going on. So I think basically they're putting their shareholders ahead of their customers at the moment.
So it's about margins. All right. Yep. Thank you, Gareth. That is Gareth Vaughan from interest.co.nz.